Hey traders, Kuda Biza here. I'm really excited about today's video because in today's video, I'm going to share a very simple yet very effective trading setup that I've used multiple times to make some money. Now, what I like about this setup is that it's very simple and it's super effective the times I've used it, but I always encourage people once you learn something new, go and back test it yourself before you just run into the market and apply it, right? Now, I just came from a very amazing morning jog in Geneva, Switzerland. So I'm really refreshed, I'm revitalized, I'm energized. So I'm going to bring this energy in this video, and hopefully you guys can take this, run with this, and make some money in the market. And the strategy that I'm going to be sharing in this video is called the inside day breakout strategy. So we're going to dive into the charts, and I'm going to show you a couple of examples of this inside day setup. So let's dive right in.
Okay, so let's start by defining what is an inside day. An inside day is a 2-day price pattern that occurs when a second day has a range that is completely inside the first day's price range. So what this basically means is that the high of the second day is lower than the first, and then the low of the second day is higher than the first. So I'm going to show you a couple of examples, and I'm going to also break down how you trade the day after an inside day pattern is formed. Let's take a look at these two candles, right? Remember, an inside day, it's a 2-day pattern, right? So this is day one and then this is day two. So you can see that the high for this candle is higher than this high, and then the low of this candle is lower than this low. So it basically means that this candle fits inside the entire candle from the previous day, right? So you can say you can see that the range, and I'll just mark it up right now. So this is obviously the high, and this is the low for the previous day, right? And then the high and the low for the other one, which is here, fit in this entire range. So this one is an inside day candle. Now I'm going to show you the best way to trade an inside day candle. And I'm actually going to use Tesla as an example, but I want to show you a couple of examples as well before we dive into it. So here's another inside day pattern. So you have this high that's right here, you can see. And then obviously the low is way over there. And then this doji candle fits in within that, right? So if I'm just to mark it over here, boom and boom. And then you can see that the high obviously fits in over here and it fits in over there. So that's another inside day candle. Same thing with this one. You can see the high over there, the low over there, but then this one comes in, this one comes in. So that's basically what an inside day is. So I'm pretty sure you guys get the concept. So now let's dive into a chart and actually see how you then execute a trade once you see an inside day candle. So as you can see, I've just pulled Tesla, and right now I have it on the daily. And if we were to look for an inside day, right? Remember, this is the high of the previous day, and then this is the low of the previous day, and then this is the low and the high for the other day. So this right here is an inside day. All right. Now that we've been able to identify our inside day, I'm just going to go to the replay, and I'm just going to go to that particular day, because if you were to then see this setup and now you're getting ready to enter the market the next day, this is how you'd play it. So you'd mark the low for your inside day candle, and you'd also mark the high for your inside day candle. Now, what makes the strategy super, super easy, right, is you're just looking for a break of the high and the low. So if this low is broken, you enter puts if you're trading options, because you're anticipating that it's going to go down to the downside. And then if it breaks the high, you enter calls, because now you know, like, okay, it's going to go to the upside. So it's pretty simple. So all you need to do is you just mark these highs and lows for your inside day, and a break of this high and low is basically your entry into the trade. So I'm going to switch it to a 15-minute time frame, right? And you can kind of like see right now it's pre-market on the 23rd. Let's just go back to the daily so that you remember what the setup looked like. So back on the daily, right? It was on the 22nd where we had the inside day. So now if we go to the 15-minute, now it's 9:15 on the 23rd, the day after the inside day, and all you're looking for is a break to the upside to enter your calls, or break to the bottom side, the low side, to enter your puts. Pretty simple. That's all you're looking for. So I'm just going to go on to the 5-minute, and then I'm just going to press play, and then we'll see how it plays out. So take a look at this, right? It comes to the low, it breaks here at 9:50. So this would be the point you'd enter. So if we were to go on to the 1-minute, ideally you'd enter in this second candle because it breaks, and then the open that's below this low is a perfect entry point for you to then enter your trade. So let's continue to see what happens. You see, it just is below that line pretty much the whole time, right? So let me just take it back to a 15-minute. So it breaks it, and you can see it's continuing to form lower lows and lower lows. So if you had entered this trade, right, you're entering right here, and then maybe you can set over here where you see this pushback as your stop loss. And then I'm just gonna go to the 1 hour. You could even set here as your target for exit. So you could pretty much say, I want to take it all the way down here. If you look into your risk to reward ratio right now, it's a 1:8 risk to reward ratio, right? Because you're only risking this little bit and you're hoping to take it all the way down to the downside. So I'm just going to go back to the 15-minute and actually see if we actually hit this new target that I set. Boom. It never broke this line again, and it actually never ever went to hit our stop loss, and it went and it hit our target price. So this is a really nice clean trade that you could have taken, and it's a pretty simple setup, right? You look for the for your inside day, right? You come back over here. Remember what I had shown you guys. This is the inside day, break of this low, and then boom. Pretty simple setup. So that's the inside day strategy right there. And whenever I see an inside day, I'm excited because I just look for two things for that particular stock. I look for my high and my low, and I look for a break. And then once the break happens, it's more than about looking for an ideal entry. For this particular entry, what I looked for was this candle that then opened below, because the one that breaks, sometimes it can come back and retest and then retrace. So the one that opens and it continues to push down, and you see like the momentum going down, this candle would have been your ideal entry. And depending on your risk tolerance, you could have just even exited, on this move. Or since we had identified our target exit price, right? We had clearly outlined where we wanted to exit. You can see you could have just been patient, right? And ridden this whole move down. And I'm just curious to see how far it also goes down. You can see like after it breaks that, there isn't really much movement to the downside. So this was the perfect exit because you would have essentially caught, if we were to measure the price difference, it's pretty much like a $4 move to the downside, right? So that's a pretty clean move. Okay, so I'm just going to simulate this trade so that you can see how much money you could have potentially made had you actually taken the trade. So the break happened around 9:53. So right now I just moved the time to 9:52, and I'm just going to buy right at the money for the puts, and I'm just going to enter one contract. And as you can see right now, it's at 181. So I'm just going to buy it at market. and we'll come here and we'll monitor to see how much money you could potentially make on this play. So if we go back to our trading view setup, it ended up hitting our price target at 2 o'clock. So I'm just going to move the time to 2 o'clock to see how much money we would have made. So remember, my entry price for this one contract was $177. And right now it's just pre-buffering to the time. So you will see the clock start moving. So now it's moved. So you can see it went all the way to $402. So went in at 177, and by just taking that move, it's now at 105. And what that means essentially is, let's say if I was to exit at that 400, I would have made $223 per contract on this one move. So, for example, if I had 2 contracts, I would have made double that. If I had bought 10 contracts and invested $1,000, so 1,700, I would have turned 1,700 to $4,000 by following this simple strategy. And in a sense, I would have made $2,200 on the trade. So that's why I love the inside day strategy, because like you just saw, if you had entered here at 9:53 and then just held it all the way down to the target price, you would have essentially made over $200 per contract you were holding if you had bought right at the money for puts that were expiring that week. So if you like this strategy, please let me know in the comments. And also, more importantly, if you really want to learn this and more strategies on how to trade options, every 2 weeks I hold an options trading boot camp. And if you want to sign up for the next one, the details are in the description. So just click the link in the description, join my options mastery bootcamp. And during that bootcamp, I'm going to teach you some skills that I'm not going to be showing on YouTube, and also just give you some really good insight on how to become a good options trader. This bootcamp is not just for beginners, it's even for some intermediate and even some expert options traders. So anyway, I hope that this video was helpful, and I look forward to seeing you guys on the other side.